Welcome to Accounting Actuals. We simplify accounting and bring practical insights on the financial tools that every business needs. If you're a small business owner trying to get a handle on your finances, this video is for you. I'm going to walk you through how to build a simple, clear budget for your business in just 20 minutes. We'll go over the basics of setting up a simple business budget, from revenue to expenses to break-even analysis. Let's dive in. Part 1. Start with your business revenue. Start with your total monthly revenue. That's all the income your business brings in before any expenses. If you have multiple revenue streams like product sales, service income, or royalty income, list them separately. This number needs to reflect the true income you reasonably expect to generate in a given period, not just your best case scenario. Part 2. Calculate gross profit margin and cost of goods sold, also known as COGS. Next, let's talk about your cost of goods sold, or COGS, and how it connects to your budget. If you're selling physical products, this includes things like materials, inventory purchases, and packaging. For service businesses, it might be subcontractor payments, project-specific software, or tools used directly on a job. Implementation of COGS into your budget usually comes in the following 3 steps. Step 1. Calculate COGS. Start by totaling up your direct costs for the month. That's your monthly COGS. Step 2. Calculate gross profit. Now subtract your COGS from your revenue. That gives you your gross profit, the money left after covering direct costs, before overhead. Step 3. Calculate gross profit margin. To find your gross profit margin, divide gross profit by revenue. Step 4. Use gross profit margin in your budget. You'll use this margin in your budget to calculate how much of your revenue is left after direct costs. This is important for finding your break-even point. Not every business will have a cost of goods sold. For example, digital product businesses may not incur direct production costs at all. In those cases, COGS may essentially be $0 and gross profit will equal total revenue. After you finish working with gross profit margin, move to Part 3, Fixed Business Expenses. Next, we list your fixed expenses. These are the non-negotiables, the bills you pay no matter what your sales look like. Include any quarterly or annual bills, but divide them by 12 to get a monthly average. After you finish working with fixed expenses, move to Part 4, Variable Business Expense. Now let's look at variable expenses. These change depending on how busy your business is. Ideally, these costs should rise or fall in proportion to your revenue, so see if you can tie them to month-to-month increase or decrease of your revenue. The more you sell, the more these go up. That's why it's important to track them closely. Next comes Part 5, Break-even point. After you've calculated all the above, your revenue, COGS, fixed and variable expenses, ask yourself, does your business show a profit or a loss? This is where it all comes together. And this is the part every business owner needs to know, your break-even point. Break-even point equals fixed expenses divided by gross profit margin. This tells you how much revenue you need to generate to make a profit. Let's look at the example on the screen. If your fixed expenses are $8,000 a month and your average gross profit margin is 50%, then your break-even revenue equals $8,000 divided by 0.50 equals $16,000 a month. That means your business must bring minimum $16,000 per month in revenue to break even. And finally, Part 6, Set goals and monitor cash flow. Now that you know your break-even point, you can set realistic sales goals and monitor cash flow more effectively. This helps you stay proactive rather than reactive, especially during slower months or periods of growth. Remember, being profitable on paper isn't enough. You need to have the cash available to keep operations running smoothly. That's why monitoring cash flow is just as important as setting financial goals. Was this helpful? Drop a comment below with your biggest expense surprise or any questions you still have. And don't forget to subscribe for more business finance tips that actually make sense. Thank you so much for watching. For more information on how we can support your financial goals, be sure to check the details in the description below or visit our page.